What's going on, y'all? Welcome to another edition of Weeds Weekly, where I, Kevin Weemark, walk you through what happened this past week in the market, right? What we can expect for this coming week. I'm going to touch on the 4 things that clients need to know, how to shop for a mortgage. You know, with the interest rates dropping, refinances popping up, and we have a lot more clients that we can anticipate are going to be running into the marketplace. We want to make sure that we touch on that and our clients know what to do and the questions to ask us mortgage professionals. And then I keep hearing on the street, let's wait. Let's wait. I want to wait for lower rates. I want to wait for, a bigger market correction, so on and so forth. And I couldn't be on the total opposite end any further. I think it's the perfect storm right now for a client to be making an offer. So I want to touch on that with you as well. So we're going to dive into past week, and I am sitting in beautiful downtown Northville, Michigan. The weather's great. We got kids running around. They shut these streets down. And as you can see, I am not sweating. So that is a wonderful thing. So this past week, we are back on the roller coaster. Is basically the best way to look at it. I mean, if you look at Monday, right? Just take Monday. The world was crashing. Stock market was down 1,000. Everyone was talking about the Fed needed to step in and do an emergency interest rate cut. Nothing could be further from the truth. It only took till like the end of the week for that correction to happen. It's amazing how so many people are just willing to just jump without actually diving in and knowing the facts. But we did see that the 10-year Treasury had bounced all the way below 3.8%. So we set a little bit of a new floor, which I think the floor is 3.8, and I think the ceiling is about 4% on that 10-year Treasury. And the other thing it really reminded me was no one really knows what the hell is going on. No one knew inflation, right? I think there was only a few people that I watched, that I followed, and I was one of them, that believed that the Fed wasn't going to do their first rate cut till July or now even September. So darn close. I believe that, I was talking about inflation was persistent, not sticky. It went from sticky to persistent. Now we're back to sticky, and inflation seems to be running right now, right? So the other thing we're learning is not only does everyone not know what the heck is going on because it's always moving and no one understands the lag effect and what the Fed policy is really going to mean as we're moving through now different labor numbers and inflation that still remains sticky, but jobs is the king. It was inflation, and inflation has proven to us pretty much this year, right? Within the last 3 to 4 months, it's consistently moving in the right direction. Be it it's moving at a really slow pace, right? It is not the hare, it is the turtle, but at least it is moving in that direction that we are going to be seeing lower interest rates due to inflation coming under control. It's moving closer to the Fed's fund target rate of 2%. So that's a great thing. So jobs now is the big one, right? Because now it's the big one because the non-farm payroll, as we recall last week, came in at 117, and unemployment was all the way down up to 4.3%. So now the labor market is under the biggest concern, because what happens is we're right now, in my opinion, we are in stagflation, right? And if I have to remind everybody, stagflation is where you have higher inflation, you have retail sales that are down, and consumer confidence is down a little bit, right? It's just kind of flat, it's stagnant. And then you also have a labor market that's just stagnant, and it's kind of receding at a very slow drip, and that's exactly, it seems, where we're at. But unfortunately, the numbers that recently came out are spelling recession, and that's why it's the number one thing on people's minds. So we went from Monday, where we had about a 75% chance where people thought the Fed was going to cut the Fed funds rate by about a half a point at the next meeting, to now we're at 50-50. So just within about a week, we've gone from 75% to 50-50 to now they're looking at probably the Fed's going to do a quarter. And yours truly has already called it. I'm going to stick by my stance unless I see different data, which is what the Fed indicated they need to see. But unless I see different data, the Fed's not going to get crazy. They're just not. Inflation's coming down. They don't want to disrupt the labor market too much. But the biggest fear for the Fed, 2 of them. Number one, that labor market right now. But looking out into the horizon, the last thing they need is inflation to spike back up again. That would be catastrophic, because that would mean that they need to either pause now for longer and kind of just let these higher interest rates ride for a longer period of time, or they may even have to increase them. So that's really what goes on. So now we come into this week, right? And inflation is back in. Inflation is going to be the talk of the town. And what do I expect on that front? I expect that you're going to see it either come in at forecast or slightly below. I don't think if it comes in even slightly higher, I think it's one of those ones that I think the traders have already baked it in. I think people have already baked it in that inflation's going to remain sticky. A lot of people, if you take out shelter and you take out other things like that, they already believe we're at the 2% range. So a lot of people believe that the Fed has already crushed inflation. So they're not overly concerned with it. And remember, traders are forward thinking. So if they're not concerned with it, they're not going to price it into the market, which means that rates are going to continuously be coming down ever so slightly or remain flat. And that's exactly what we're seeing. So inflation's going to be taking a back burner. I don't expect that much this week, but the Fed gets this week, and then they're going to get another read of inflation before their Fed funds policy meeting on September 18th. So that's a good thing for the Fed, but I don't expect fireworks, okay? The two other things that we're going to see this week that we'll get kind of a good read of just what's going on, the overall health of the economy, although I don't think it's high on the Fed's radar, is we're going to get retail sales. That will be one that is somewhat high on the Fed's radar. And as we saw last month, it was a big spike, if you recall, and I thought it was pretty much a bump in the road. A bump in the road meaning that everything with going back to school and summer travel and everything like that, I really thought that number was high due to those reasons. It'll be interesting to see if the summer is still one of those ones that is kind of pushing that number high. Do we see retail sales beat expectations once again, showing resiliency in that consumer? Or is it just the high-end consumer that's outspending the money, right? That's kind of the big thing that no one can really put their finger on. Because if you look at the raw data, yeah, there's a lot of people that are above middle America that are out spending money all the time. You go to these restaurants sitting in downtown, I guarantee if I came down here tonight, be packed. In Austin, Texas, it's packed every night. So you wonder how that can be, knowing that middle America, people that are living paycheck to paycheck, just got killed by inflation. So I'm curious where that number is going to come in at. And then for us in the real estate space, we got housing numbers. So we'll see from housing starts to building permits, exactly what is going on and what are they thinking about the market? Because again, the interesting thing about them, especially from a permit perspective, builders are forward thinking. They're going to be looking down the road. What are we going to be doing in months ahead? That's what they're concerned about. All right, let's jump to how do we shop? I think this is a huge topic. I think this is great advice. I advise you to share it with your clients. And here's why. I get calls all the time and people are like, let's see your loan estimate. They're worried about APR. They're worried about all this stuff. And here's how it works. We basically control 4 things. That's it. All those title fees, all the appraisal, all surveys, all those fees that are associated with that loan are going to be put up by the title company. It's illegal for us to mark them up. And when you're asking for a loan estimate, we have to come in at roughly what we think it's going to be because there's a curing aspect of it, right? Meaning that if I tell you that the appraisal is going to be $1,000 and the appraisal comes in and it's actually $1,500, I can only cure that 10%. So now that means I can only charge you $1,100 and then it was $1,500, means I got to eat it. So those loan estimates are always going to be high. So if your client is using that loan estimate as a barometer of who they're going to use and who they should be shopping for and who they want to actually use for that mortgage, that could present a problem. The 4 things that they need to be asking their loan professional is, number 1, what is your interest rate, right? The interest rate is going to be dictated because it's exactly how I get paid. I get paid a yield on the back of that interest rate. Every interest rate has a different yield tied to it. So that's the number 1 question. The number 2 question you want to be asking is, what is your origination fee, i.e. what points am I going to pay, right? You want to know that. That is something that is directly controlled by us in the mortgage space. So that's the second question you want to be asking. The third one, what's your processing fee? Right? In today's marketplace, everyone that's actually doing a good amount of business has a processor. So they're going to need to pay them some money. Now, whether they eat some of that cost or they turn it all over to you as the client, that's the big question. But at the end of the day, there is a processing fee. So you want to know that. So that's the third thing. And the fourth thing that you want to be asking them is, what's the underwriting fee? And the underwriting fee is typically, what is the bank charging to do the loan? Okay. And every bank is going to have a fee to do that. They range anywhere from $800, it could be $1,200, $1,500. And again, us as loan professionals, we could eat some of that cost. We can control that cost. So that is definitely something that you want to be asking. But those are absolutely the 4 questions, the only 4 questions you need to know when you're shopping. And the other caveat to that you want to remind your clients is when they are shopping is that they're telling everybody that they have the same parameters. So you have a certain set FICO score, mid FICO, you're going to be putting down so much money, right? So you're going to be putting down 20%. So you want to be really specific in that. You want to indicate it's a purchase and you want to provide them the address. That's all you want to do. They don't need to run your credit to give you a quote or anything like that. That is the biggest thing. That is the way that you shop. You shop with 3 or 4 phone calls. You write those 4 questions down, X, Y, and Z, and you mark them off, and then you compare them one to the other, and you pick your best 2, and you quote them rates, and when you're ready to lock, you move forward. That's the best way to shop. It's the only way to shop, because all that other stuff is just noise, and it's something that we as loan officers and brokers do not control. So make sure that you're educating your clients in that space. And I'm more than happy to do it. I don't mind that people shop at all. I actually encourage it because I know exactly where I am. So I'm not worried about that, and I'm honest and I'm straightforward. And as you all know, my goal is to save your clients and my clients money. That's it. That's my number 1 goal. I want to save you money, whether it's the cost, whether it's the long-term rate, whatever the case may be. That's my job. So those are the 4 things that you need for shopping. And then the last thing is, I keep getting questions on let's wait. I heard it talking to real estate professionals this week that were holding open houses or clients that they have, they got the buyers, but everyone is like, let's wait. I think the pricing is going to correct itself a little bit more. I think that this, and you know what, with the election coming, I think it's an interesting dynamic because I think we're in a very unprecedented time in that regard. But I'm going to just talk from the standpoint of where the market is at and where I see it, because I think right now is the perfect storm. So when I'm talking to clients and when they're asking me on let's wait, I'm talking basically in 2 regards. I'm talking to buyers, and then I'm talking to people that want to refinance. So I see it in 2 spaces, right? Because as a lot of you know, and I mentioned it before, I own a real estate company up here in Michigan. So I deal with that as well. So on the buy side, if you are dealing with buyers, my thing to them is, look, there's only a certain window where you get sellers willing to negotiate. And what do I mean by that? I mean sellers that are willing to negotiate on several fronts. And I'm talking they're willing to negotiate on any terms, they're willing to negotiate on price, they're willing to negotiate on seller concessions, and so on and so forth. Right now is that perfect environment, especially down in Austin, Texas. You're looking at 5 months of inventory, so you got a plethora of homes to choose from. And you got interest rates that we all know in the future are going to be lower. So that's a positive as well. And the big caveat is you can write as many offers as you want. It's the best way to find houses. Is our job as real estate professionals is to write as many offers as our clients want, to write them on any house that they want with any terms that they want. So you can write those all day long. Right? And you should be writing a ton of them in order for them to find the perfect house with the perfect value. It's my best recommendation, because once that tide turns and we get through this election, you got this really small window right now, and all of a sudden if the Fed decreases a 1/4 point and they're talking of future, because again, the market's forward thinking, then you see rates go even a little bit lower. Sellers are not going to be like, oh, okay, yeah, I'll negotiate. Nah, I think the market now is going to pick up, so now I'm going to wait. Now, I'm not going to negotiate with you. No, I'm not going to pay seller concessions. No, I'm not going to pay your buyer's agent's fee. No, I'm not going to reduce my price. I have multiple offers now, or I got 10 showings this weekend. It's coming. Right now is the perfect storm. Write those offers. And on the refinance, I say to everybody all the time, look, you don't have a crystal ball like I started at the beginning. I'm not Warren Buffett, right? I don't have the crystal ball. When you can get a 1/4 point to a 1/2 point lower in your interest rate where there's zero cost to you, where I'm eating it out of my commission without increasing your loan amount, and you can get that savings immediately in your pocket, you should jump and do it, because future rate cuts are coming and you'll be able to then pay closing costs at that time. You do not need to pay closing costs. So when I get clients that are like, oh, I want to wait, I'm like, hey, that September rate cut is already priced into the market. And I'll tell you why I know that. On Monday, we were at the lowest rates possible when everyone thought it was a 75% chance that the Fed was going to decrease it 1/2 point. Now that it's a 50-50, rates are up. Rates are up a little bit. They're anywhere from an 1/8 to a 1/4 point higher. So you don't have the crystal ball. I tell clients all the time. You think that when the Fed decreases in September, we're going to see a direct correlation to interest rates dropping? We're not. All right, everyone, have a great week. Peace. I got to keep this under 15 minutes. You need anything, you reach out, you let me know. Happy selling out there. You need anything, just reach out. Cheers.